1 year ago today, I went ahead and started my investing journey with zero knowledge. All I did was watch some YouTube videos and listen to some podcasts, did the shotgun approach and bought a bunch of different stocks, which included ETFs, covered calls, and the like. And guess what? Some of them have not performed very well. In fact, one of them has sucked the life out of me and my portfolio. That's right, it's Bell Canada, ticker BCE. In today's video, I'm going to go over how Bell Canada's performed. I'm going to talk about why I sold it, and I'm going to tell you what I did with the money. Now, as a new investor, it is to be expected that you will do what I did. I'm no anomaly. I'm a DIY investor, and guess what? People are going to do the same thing that I did because there's nothing that gets you ready for day one of investing. But of course, before we do that, we're going to look at my portfolio. We're going to see how the portfolio is performing. We're going to buy some stocks, and we're going to look at the dividends that we've earned since the last video that I posted. My name's Darren. This is the Crazy Canuck Investor, where I try to make investing a little bit easier for beginners. And I do that by sharing my journey with all my ups and downs and the lessons that I learn along the way. Because let's face it, there's nothing that gets you ready for that first day of investing. Now, let's jump right over into my portfolio and we'll check out all the accounts. Now, my portfolio is right now made up of 4 separate accounts: my cash account, my kids' RESP, my RRSP, and my tax-free savings account, or TFSA. Now, the total within all 4 of those accounts right now is $138,550. We're going to start off with my cash account. The total in my cash account is $36,424. Now, good news, recently, between the last video I posted and this video, Wealthsimple actually sent me an email and allowed me to get on board with the beta testing of the joint cash account. And I think this is fantastic because up until the last video, my wife had to have a cash account and so did I. And that meant that we couldn't both manage that money together. It was solely on my shoulders. And I don't think that's necessarily the best way to manage your money because you want your partner to have access to it as well. So I went ahead and I set up the joint cash account. And since I started it, that account has earned roughly $30 in interest at 4.5%, because that's the same as the cash account that I held before. And you can see here that before I moved, or at the point that I moved the money, that my own cash account had earned $76 in interest. Now, moving forward, it is our intention to move most of our banking over to Wealthsimple. If you watch my last video, I'll explain the reasons why we're not doing that immediately, but this is a great step moving us in the right direction for that. Now, my kids' RESP, or Registered Education Savings Plan, is up to $61,099. Now, this is a robo account. I've got some videos over there that you can watch to learn a little bit more about it. But in fact, it is the best performing account in my portfolio, even though it's managed by a robo-advisor. So it just goes to show you that sometimes those things do pay off. Now, my RRSP is up to $16,358, and I did go ahead and make some changes within this account. So let's go ahead and break down those changes. All right, so we're going to jump over to Passive. Passive is a great tool for tracking all of your portfolios in one place, and if you're a Questrade user, you get it for free. I have a Questrade account, so I do get it for free. I did make a video of it, and if you want to learn a little bit more about Passive, you can go ahead and watch that video. It will sort of point you in the right direction as far as how it works and what it does. I really love it. All the information at my fingertips. So here we are in Passive, and we can see from the last video that I posted all of the buys, trades, and sells that I did. So let's go ahead and talk about those. Okay, so I am using my RRSP and pairing it up with my TFSA to utilize the US funds and the benefits of my RRSP so I don't get hit with that withholding tax on any dividends. Now, I started my RRSP buying things in Canadian funds, and I've decided to sort of transition that over time. Now, what I did is I was holding XIC in Canadian funds, so I sold off a bunch of that. And I had some other cash that was available in that account. I took all that money and I converted it over to US funds. Yes, I did get hit with that 1.5% conversion fee that Wealthsimple charges, but once the money is in your RRSP, there's no other way to avoid that I'm aware of. If you are, go ahead and please tell me in the comments. I'd be happy to hear about it so I can make that change. As I said, I'm a beginner here learning with you guys along the way. So after I converted the money over, I went ahead and I bought a few different funds. I bought a little bit of VU, it was just a fractional purchase. I bought HYLD in US funds to generate a little bit of cash with a covered call strategy. I bought AVUV, $879 worth, and I bought AVDV, $450 worth. And then I also went ahead, as you know from the beginning of this video, and sold all of my Bell Canada position, and I'll talk about that in a bit as to why I did that. And I sold my Manulife shares were up quite a bit within that account, above 30% as far as growth goes. So I sold one share of it off to take a little profit, convert that over to US funds, and again, utilize it to buy some more stuff. I also sold off $506 of HYLD in Canadian funds, and again, converted that over to US funds. And then I also sold my QQC position, which wasn't very big at all, very small. And then with those funds, I went ahead and I bought a bit more AVDV. And of course, last is my tax-free savings account. Now, we're gonna break down the tax-free savings account so it has $24,491. Now, the markets have been taking a bit of a beating recently, but that is to be expected. You can't expect every day will be a great day. So over the last week, my TFSA is up only $217. And over the last month, it's down $469. Now, this is where you gotta stay the course. Really, in the grand scheme of things, this is not a big deal. Ride it out. Things will get better down the road. At the 3-month, we're up $522, and all-time returns, and keep in mind, I'm now past that first year of investing, I'm up $2,049. So not too bad. So let's jump over and we're gonna go ahead and buy some stocks. So as usual, still using passive in order to guide us along the way so that we're using our asset allocation to figure out what stocks we're gonna buy. So today we have $1,001.13 to purchase some stocks with. The first stock we're gonna buy is XEF, and we're gonna buy 19 shares of that. And the next ETF that we're going to buy is XIC. That's the total Canadian market. We're going to buy 6 shares of XIC. And the last thing we're going to buy is VRE, which is a REIT ETF. So it holds a whole bunch of different REITs, and we're going to buy 4 shares of that. Here we are in passive. I love passive because you can combine a couple of your accounts. Let's say you have 6, you can put 2 together and see all of the buys, trades, and dividends and sales that you've done over a certain period of time. Great search engine. So here we're going to look at the dividends. Now, if you are interested in passive, I do have a referral link down in the comment section below. If you use it, you get a discount. There is a free version of it that you can use, but of course it doesn't have all the bells and whistles. If you're a Questrade user like me, you do get that for free. But if you use the referral link, you will save on that annual fee. Okay, so since the last video in my TFSA, Plaza REIT paid out 19 cents. And BCE or Bell Canada paid out $14.96. That's a big payout, but it wasn't enough to keep me holding this stock. We're going to talk about that in just a minute. Plaza REIT in my RRSP also paid out 19 cents. EAT.UN paid out $8.50. And CarUN paid 60 cents out. Now that doesn't seem like a lot, but it's grown since they started. Now keep in mind, I've been investing for only a year, and every time I get a dividend, it gets reinvested. So that's that compounding working, and over time, this will continue to grow. Now let's talk about Bell Canada. This is the part where I admit to you what mistakes that I made. And this is the premise for my channel, where I'm sharing what I'm doing so you don't make the same mistakes that I did. I jumped into buying this stock solely based on watching a few YouTube videos and listening to some podcasts. And I will fully admit that I didn't know a lot about the company. I knew that it had a high dividend that payout as well as a high yield,
But in grand scheme of things, I don't really know too much about Bell Canada. What I do know, and I'll share with you, is that Bell Canada is a large media company in Canada. They delve into cell phones as well as media, which includes one of our big media companies, CTV. And you'll see their name kind of at sporting events and so on and so forth. Now, I know that when I post this video, I am going to get some flack from some people on Blossom. And if you don't know what Blossom is, it's a social media platform for investors where investors can get together, share ideas. It has great learning tools. You can track your dividends. It's kind of similar to Passive in some ways, only you can talk with other investors and share ideas. So if you haven't checked it out, please go over, have a look. It is a great tool as a new beginner. They actually have one whole section just on learning, which is fantastic. So be kind if you're from Blossom and you make it this far in the video and you're going to throw some comments in that I should have done things differently. Try to be kind, please. So Bell Canada has 45,000 employees across the country, so they're a big player in this country. And as far as their market cap goes, they are a $41 billion company. Let's look at their dividend. The dividend dating back to February of 2021 was 87 cents, and it's since then grown to April 15th of this year to 99 cents, so almost $1. And that is a lot. If we look at the yield, it's 8.85%, and that's pretty big when you consider that a lot of stocks don't pay a dividend at all or something in that 3 to 5% return. Of course, that is not the end all to be all. And unfortunately for me, I think this was one of the attractive things, thinking what could possibly go wrong with this stock. If we look at the stock chart here, we can see that the stock dating back to 1999 has had some ups and downs. That's pretty normal, but it's slowly, progressively gained. And then in March, I think it's actually April. Yes, in April of 2022, it was trading for $72 a share. And subsequently, I bought in about 1 year later in April of 2023. So if we scroll along, we will find April right about there. Okay, so there's April 6th. I bought in at $62 a share. And keep in mind, the yield and the dividend were paying out. So I thought, great, this will work just fine. Fast forward, this has now plummeted to $45 a share. And nobody knows where the bottom is. I suppose some might refer to this as buying the dip. But is this company strong enough? Will it grow? What's it going to do over, say, the next 2, 5, or even 10 years? Can it really grow? Canada's market's not that big. Does it have to diversify more into the States or other places? I don't honestly know. And not knowing enough about their business strategy, I didn't think it was a good idea to hang on to that stock anymore. And so that's why I decided to sell it. So in dividends, it paid out about $50 to $60 for me over the last year in total. So my total loss when I sold it was about $160. Now I could have hung on to it and seen it turn around, but I don't know when that is. And I know that I have some other ETFs that actually hold Bell, such as XIC. So by holding those ETFs, I actually get exposure to Bell Canada just in a different way. And so I felt that was a safer route. So if I was to make a suggestion to new people who are starting out investing, it would simply be start off with some ETFs until you learn more. In my intro, I talk about the fact there's nothing that prepares you for day one of investing. I'm a good example of how that worked. I dove right in head first, and obviously I ended up having to take a bit of a loss. It's not a huge thing. It'll be made up. I'm not overly concerned about it. So take the time to research some companies, and you'll probably pay off in leaps and bounds. But if you're a beginner, I would highly suggest starting off with ETFs. Of course, that's just my suggestion. You'll have to do what you want. Now, if you stuck around to the end of the video, I really appreciate it. I do put a fair bit of time into these videos, and of course, I don't get paid for them. So I found a way that you can help me as a creator. In the comment section below, you'll see that I've added a link to buy me a coffee. If you feel so inclined and you're enjoying the content, perhaps think about buying me a coffee and I can drink one while I'm editing or shooting these videos because it keeps me motivated. So if you stuck around, I really appreciate it. Thanks so much for watching this video. Hit that thumbs up, hit the subscribe, share it with your other friends, especially the new beginners, and we'll see you in the next video.